The economic news continued across in New Zealand today as well, with the RBNZ deciding to hold the cash rate steady. That was no surprise. What did catch the market by surprise was actually this suggestion by the central bank that rates will remain on hold at 2.5% for the remainder of the year, despite upside and downside risks, of course. These include the expected rise in output, low near-term inflation, a strong Kiwi dollar, as well as a weak labour market, and a persistent drought that could be detrimental to farming.
I think the surprise is that the Reserve Bank in New Zealand believes that interest rates are going to remain unchanged for all of 2013. Now, if only we could hear that from the Reserve Bank of Australia, saying interest rates unchanged for the remainder of the year, we could all get about our business, haven't got to worry about interest rates decisions from month to month. So they're recognising there's some upside risk, there's some downside risk, but broadly they're expecting the economy to be growing between 2 and 3%. Inflation drifting up towards the midpoint of the range, up to around about 2%. Overall, though, they don't believe that there's going to be sort of the need for either a sharp lift in terms of interest rates or cut in terms of interest rates, and they've signalled that, and it's been very, very clear. Now, let's put a bit of downward pressure on the kiwi, put a downward pressure on the Aussie dollar as well as a result, as a spin-off, but I think it's a very good decision.
The RBNZ's concerns about the uneven economy, as well as the possible impacts from the drought, sent the Kiwi dollar to its lowest level of the year against the US dollar.